My screen turned off? What do you mean?
Oh, you were. Oh, there you go. I was like, you were brighter.
Yeah, that's why. That's a that's a 27-inch monitor giving me cancer right now.
Tell me about it. Well, we'll leave that one in. Well, everyone, hey, welcome to another weekly recap. Peter's going to take most of the lead today for our recap. Everything we're sharing, even though we're showing you like real trades we make, is for educational, informational purposes only. You still are responsible for your own decisions. Peter and I are both at a frame of mind that you shouldn't be trying to, look at free videos on YouTube and thinking you're going to become a stock market millionaire. I think the path, it's been like this for ages. Pilots, doctors, the path of mentorship. You get other people who've already experienced, guide you and show you the way. It shortens cuts your learning experience, your learning curve. You don't make the costly mistakes we've already made. You can avoid those. So we welcome you. This is Trader Travis, and that's my Success Academy co-trainer, Peter. And what I'm going to do real quick is show you my screen. I'm going to just touch on the market real quick, and then Peter's going to take over from there. All right, so what I'm going to do is just cover the S&P real quick. Last big recap, I talked about how the market's going up is unsustainable, and what I'm looking for. I felt like the market was kind of setting us up to disappointment, like it was going to crash in price. This is perfect, or where I say you have to trade what you see, not what you think you're going to see. If I traded what I thought, I would have bought a bunch of put options, and I would have lost money because the market's still raging higher. You have to train yourself to trade what you see, not what you think. If you watch the news or you listen to other people, even things I say sometimes influence people's decisions. No, we always follow our mantra, trade what we see, not what we think we're going to see. And so I was looking for confirmation for what I thought, and that was like a close below the moving average, a short-term moving average, or a market club red daily trade triangle. And we got that, right? So looking here at the market, we see that on February 7th, we did get a close below. So I traded what I saw. I took a short-term bearish position, meaning that I make money when the market goes down, because I didn't know if this would be just a temporary close below or it would keep falling in price. But my trade plan was, again, to trade what I see. And I was like, well, if the market reverses and I get a green daily or, close below or above the shorter-term moving average, then I'll just close that trade and get back in on the bullish side. And that's exactly what I did. I don't take anything personally. Like you can't argue with the market. The market's always right. And so now I'm back bullish and back making money. I recouped the small loss I had for maybe a 2-day trade that I was wrong on. And now I'm back to making money. And so, until the market tells us otherwise, I am still bullish. I'm kind of neutral bullish. I'm leaning more towards bullish, but I'm cautious. I'm not like, oh yeah, the market's gonna have a 20% return. No, I'm cautious. I still think this is crazy. The market's gone up. I haven't even calculated a percentage, but it's gone up more than 16% in the last just a couple of weeks. So I don't know how long this is going to last. But generally, that kind of movement is unsustainable, meaning that it won't last. The market either trade flat for weeks at a time, or it'll just fall on price to what they call reversion to the mean. Moving averages, you see right here, I have a 7 and 30-day moving average and a 200-day moving average here. The 7 and 30 have a lot of spacing in between them. That's generally not the case. If we look back here to 2018, you see like the spacing between the moving averages is a little bit smaller. And that's generally what you want to see in a normal trending market. But when they have so much space in between them like they do now, that won't last. That wide gap will kind of shorten down over time. And so I know that just from the 18 plus years I've been doing this. So I already know this move won't last. I just don't know what's going to happen. But until that happens, I'm going to continue trading the way the market's going, and that is up. So with that being said, I'm going to go ahead and turn the floor over to Peter, and he will take it away for the rest of the time we have together.
All right. Okay. Well, thanks, Travis.
Mm-hmm.
All right. So we were kind of joking about it. You guys can see how much brighter I am. That's because I finally pulled out of storage my iMac, and it's a big 27-inch screen that's giving me a tan right now because I love this thing. So I'm finally back on it. But now, if you guys see pop-ups, it's because this thing is catching up to being in storage for close to a year. So anyway, all right. So I'm going to get right into it. I'm going to try and be quick. I always say that, I'm never quick. There was one thing I wanted to cover real quick before we get into trades, and that's mindset. Travis and I were talking about this. We've kind of touched on it before in the past about some of the YouTube or internet trolls that we get that comment on our posts, our weekly recaps, and I was going back through some of those comments, and I decided that if you guys want to share your negative thoughts, or if our platform is the only place you can vent and that's where you want to throw in your negative stuff, you go ahead. But just understand, I don't read them anymore. I think someone posted something in our last one. As soon as I started reading it, it was negative right from the get-go. I didn't even finish reading it, and I don't care to. And the reason for that is because as I was getting ready to place trades today and get back into the market, I thought about how mindset is so important to being able to place those trades based on your conviction in whatever templates you use. The templates that we use, I trust those templates. But when I let a lot of trash get in my head, specifically people talking negative, it limits my ability to effectively place my trades and do what I'm supposed to be doing, follow my trade plan. So the first thing that you could do for anything when you're making a decision, whether it's on trading, whether it's to buy a new car or a new house, whatever it is, get in the right mindset. If you get in a positive mindset, if you read positive things, listen to a positive motivational speaker, don't get rid of all the negative head trash. Don't watch the news. Don't watch CNBC before you place trades, because you'll never place a trade. So get in a positive mindset. So once I did, I'm able to place my trades effectively. So now, Travis had sent out an email to a lot of us that are in the program. It was kind of a happy Valentine's Day, and he gave us some stocks to watch. I'm going to cover some of the ones he gave us on the 7th. So actually, I'm only going to cover one. So here's what I do. So for those of you that got the email and you see this, or when you guys hear us talk about something, here's how I do it. So this is my Market Club template, and I'm going to pick STE. Let me find it here. It's in one of these here. No, that's STMP. Sorry, I had it on there. There it is. So this is one of the ones that satisfied a PR template that we use, and that's why Travis had put it out. And if you look at Market Club, it had a green weekly back here on the 16th of January, and then it triggered a monthly on the 12th. So I was looking at this like, oh, this is a really good stock. I want to definitely check it out. So I look at, this is how I do it. I look at the 1-year chart. That's what you're seeing now. I'll look at a 2-year chart. I like the 2-year chart, and I'll also look at a 5-year chart. And I really like the 5-year chart. This stock has basically gone up for the last 5 years. Your work isn't over there, though. You then have to come into your trading platform, and this is where I'll get a little dark, Travis, because now I'll go to.
Oh, that's good.
So this is the actual chart, right, for STE. But then I go into my trades, and this was the first thing I saw that bothered me. I only see 4 different trading months for options. That was the first thing I saw. So I'm like, I wanted to do a vertical credit spread. I like to focus in on the 45 to 60 day mark. I can't do that. So I'm looking at the next best one, which is 126, right? So let me bring out, and then I can't see it, but you guys can look at my, sorry, I changed, I'm in a different one. All right, look at the open interest, 63, not the end of the world. Let me go into verticals, but that's for a call or a put. And I look at the open interest on the credit spreads, nothing. 27 for one in the money. So, so when I look at that, I immediately cancel it off the list. Now let me give you a comparison. Let's just look at Nike. A much better option, right? You can see now I got the days I want. There's 62 or 42, right around the days I like. And then I don't like the open interest. There is none on the 42, so I can go to the 62. It's right in my wheelhouse and look at the open interest. 304, 128, where it's right at the money. So that's the homework I do. And then once I figure out that's when I want to place the trade, that's what I do. Now, one of the things I want to cover real quick, because we do a lot of the ETFs. You will tend to get very lazy with the ETFs because look what you never have to worry about with ETFs, open interest. No matter where you go, we can even look at 4 days left and there's 593 open interest. ETFs this is an index ETF. They just have tons of open interest. So you get lazy. So it's something that you want to definitely pay attention to. But having said that, I did place some trades. I'll show you guys what I placed. I'm going to just use an Excel spreadsheet. So this looks like a lot of trades, but I have 4 different trading accounts that I place these over. So you can see basically what I did was I took the same trades and placed them over 4 different accounts. So you see I placed it on IWM, SPY, and IYR over 4 different accounts. My total risk is less than 1% of my total account. As a matter of fact, my total risk is $2,100 is my total risk, which that would be if I let them go to 100% loss, which I don't ever do. So, but that would be my total risk, which is less than 1% of what I'm trading across based on my account numbers. And then there's my credit. That's the money I brought in, $1,658, and that was really back to a testament. We talk about it in the past, Travis, on our videos. It took me a little bit longer to place those trades because I was placing over 4 different accounts. It takes me a little bit longer to do it, but really, I had been looking at when I wanted to enter the trades. Today was the day I decided to enter. And the one thing I don't think about, like what Travis was talking about, he was talking about, the market can't sustain this upward move. And I know that too, but I also know that I'm not always right on my trades. So if these trades turn out to be losing trades and I lose, 50% on them, that's going to be 0.5% of my account because 100% loss is 1% of my account. And I know I'm going to make those back up. And I'm going to do what Travis does. When the trade goes against me, well, then I'll just do a short-term bearish spread to make up some of the revenue. And then when the market resumes its upward trend, I'll go back into it. So very, very important, though, you guys, mindset, very, very important to focus on the right thing, the positive thing to get into your trades. I know that took a lot longer than I think I wanted to, but that was pretty much it. The last thing I did want to say, so we had a comment from one of our members, Rashid, that liked Travis's old spreadsheet. He used to show us his thoughts. So next week, what you guys can look forward to is I will pick Travis's brain, not on every trade he makes, but I'll take that spreadsheet and something that kind of pops into my mind about a trade that I think you guys would be interested as much as I'd be interested in. Hey, what was your thought process when you place that trade? So that'll give you guys a better understanding of how Travis goes about going through his trades. And can't say it enough, 18 plus years. I've been following Travis for, can't remember. We always talk about this. I shouldn't slam my hand down because it's going to come across my mic. 6 or 7 years now, at least, I think. We're 2019. Maybe
it's been a while.
It's been a while. And I have not lost my shirt following Travis's advice and his system. So that's it. That's pretty much it. Hopefully I covered it well.
Yeah, that was cool. The losing the shirt part is huge. People don't realize that. Options are leverage. They have, you can get rich quick. You can also lose your money quick. So people get seduced by, I won't say any companies' names, but they're always showing you 100% winners. Like, seems like every trade they're making is a winner. And then they join the program and you start losing money. You're wondering why. Not only losing money, you lose a lot. I've committed to, I've been down that road. I'm like, that doesn't work. Like, we want to teach something that we know works, a proven system. It's built-in insurance designed so you don't lose your shirt, so that you're in the position to make these decent returns of 15, 30% a year, but that you don't blow out your account, lose 40 or 50%. That's unexcusable. That's absolutely no reason in the world anybody should ever lose 40 to 50% of their account. I don't care which strategy you're using, even if it's buy and hold. No, it's unexcusable. So everything we do has built-in insurance, so you don't lose your shirt unless you just choose not to follow what we teach, and that's on them. I can't, take responsibility for other people's bad decisions. But all we can do is show up and show you stuff that, hey, it works. If you follow this, losses are normal, but you won't lose a ton of money. And then from there, it's up to you to make the good, proper decisions and be a good steward over your wealth. You've worked hard for your money, right? But be a good steward over it. So that's my rant for the day. So you have anything else?
No, that was it. I think we covered it.
All right. Well, until next week, everybody, I'll have more, and then Peter can pick my brain on any other trades I make between now and next week. All right. You all take care. Yeah. Hey, I'm going to enjoy that. That's going to be fun. All right. You all take care. See you in the next recap. All right. Bye-bye.